Right now, while you're watching this video, something massive is unfolding in the silver market, and the name connected to it is going to surprise you. Warren Buffett, a man famous for avoiding precious metals, is quietly being linked to silver once again. And even more shocking, insiders are whispering about a leaked price target as high as $175. If this turns out to be true, we could be standing at the edge of one of the largest wealth shifts of our lifetime. And it's all happening before the Asian markets open on Friday. What you're about to hear could completely change how you see silver forever. Welcome back to John A.G. Gold, the channel where we uncover the moves Wall Street doesn't want you paying attention to. If you're new here, this is where we break down the real market forces, the quiet money strategies, and the opportunities most people only realize after it's too late. Before we go any further, hit the like button and subscribe to John A.G. Gold so you never miss updates like this, because staying early is how fortunes are built. Now let's rewind for a moment, because to understand why today is so important, you need to know what Buffett did years ago. Most people believe Warren Buffett sticks only to safe, boring stocks, banks, soda companies, insurance firms. They think he hates gold and silver. But the truth is far more interesting. Back in 1997, Buffett made one of the most unexpected investments of his career. Through Berkshire Hathaway, he quietly bought nearly 130 million ounces of physical silver, almost one-third of the world's available supply at the time. Think about that for a second. The world's most famous long-term investor didn't just buy shares of a mining company, he stacked real silver. When this finally became public, the financial world was stunned. Buffett rarely explained the move. He simply said it was based on supply and demand. He saw a shortage coming long before everyone else did. He knew industrial use was about to surge, and silver was massively undervalued. Over the following years, he sold the position for a profit. But many believe he exited far too early. Some analysts even claim powerful players didn't want silver prices exploding and pressure was applied behind the scenes. Whatever the real reason, Buffett stayed away from silver for more than 20 years, until now. According to growing chatter inside financial circles, Buffett, or entities closely tied to Berkshire, are quietly building silver exposure again. And the timing could not be more perfect, because today's silver setup is even more extreme than it was in the 1990s. The supply crunch is tighter. Industrial demand is exploding, and above-ground silver is disappearing faster than ever. Silver is no longer just a metal for coins and jewelry. It is the backbone of modern technology. Every solar panel needs silver. Every electric vehicle relies on silver. And here's where the real problem begins. The world is using more silver than it can produce. For years now, the silver market has been running in a deficit. Demand keeps climbing while supply keeps falling behind. And that gap isn't shrinking. It's getting bigger every single year. The green energy boom is burning through silver far faster than anyone expected. Solar panel production alone is projected to double over the next 5 years. Electric vehicle manufacturing is exploding worldwide, and every one of those technologies depends on silver. But while demand is surging, supply is quietly breaking down. Very few major new silver mines are being developed. Older mines are producing less as they age. And here's something most people don't realize. Nearly 70% of all silver is mined as a byproduct of other metals like copper and zinc, which means you can't just turn on more silver production when prices rise. It doesn't work that way. This is exactly the kind of imbalance Warren Buffett looks for, situations where basic economics make the outcome almost inevitable. When demand keeps accelerating and supply can't respond, prices are forced higher. It's not speculation, it's math. And according to leaked chatter circulating inside financial circles, the price target being discussed is around $175 per ounce. I know. That sounds insane when silver is trading near 30. That's almost a six-fold increase. But here's why that number may actually be conservative. Back in 1980, silver hit roughly $50 an ounce. Adjusted for inflation today, that equals somewhere between $180 and $200. So a 175 target wouldn't even break silver's real historical high. It would simply return to levels it has already reached before. And back then, silver didn't have anything close to today's industrial demand, no massive solar industry, no electric vehicle revolution, no global tech explosion. Today's demand is on an entirely different planet. Now here's why everyone is watching this. Friday's Asian market opened so closely. Some of the biggest moves in precious metals history started when Western markets were closed and Asia opened. Liquidity is thinner. Large players can enter positions quietly, and price movements can begin without triggering instant media attention. We've seen this exact pattern in gold and silver again and again. Major rallies often begin Sunday night, right as Asian trading comes online. Someone with the experience and resources of Warren Buffett would absolutely understand this dynamic and know exactly how to use it. Now let me be clear and transparent, because that's what we do here at John A.G. Gold. There is no official confirmation that Warren Buffett himself is directly buying silver. The information suggests entities connected to Berkshire Hathaway or Buffett's inner circle may be involved, and moves like this are almost always kept quiet until filings are legally required. What we can confirm is this: unusually large silver purchases are happening. Physical silver is being moved into vaults at record speed, and premiums on real metal are rising above paper prices, which tells us one thing. Big money wants physical silver, not contracts, not promises, real metal. And here's why that matters for people like you and me. When someone like Buffett enters a market, he isn't chasing quick profits. He positions for massive long-term moves he believes are unavoidable. In 1997, he saw silver was undervalued compared to its industrial importance. He was right. He just exited too early. If the rumors are true and he's back now, it suggests he sees an even bigger opportunity unfolding. And when you combine supply shortages, exploding demand, and global money printing, it becomes hard to ignore. Just look at what's happened to currencies over the past few years. Trillions upon trillions of dollars have been created out of thin air. Inflation has crushed purchasing power. Savings have quietly lost value. And history shows that in times like this, real assets don't just rise, but the core problem hasn't gone away. There is still too much money chasing too few real goods. And throughout history, whenever currencies are diluted like this, people flee into hard assets. Gold has always played that role, but silver has something even more powerful working in its favor. It isn't just a store of value, it's a critical industrial metal, which means silver benefits from both monetary fear and real-world demand, what a combination gold simply doesn't have. Now here's a factor most investors completely overlook: the gold-to-silver ratio. For centuries, this ratio averaged around 15-1. 1 ounce of gold was typically worth about 15 ounces of silver today. That ratio sits near 80-1. That's not normal. Historically, levels like this have signaled that silver is massively undervalued compared to gold. If the ratio merely returned to its long-term average, without gold even rising, silver would need to multiply several times from current prices. And if gold continues climbing, which many experts expect, silver could surge even further. Suddenly, that leaked $175 target doesn't sound crazy at all. It lines up perfectly with history, scarcity, industrial demand, and monetary reality. In other words, it isn't hype, it's math. So the real question isn't if silver eventually reaches these levels, it's how soon. And if investors, as informed and connected as Warren Buffett's circle, are positioning before the Asian markets open, it suggests the timeline may be much closer than most people realize. Let me share something personal with you. I've followed the silver market for years here at John A.G. Gold, and I've never seen conditions line up like this. A growing supply crisis, exploding industrial demand, global money printing, weakening currencies, and now unusual activity from major players. Every signal is pointing in the same direction. Now, does this mean you should rush out and put everything into silver? Of course not. That would be reckless, and I'd never suggest it. What it does mean is that this is exactly the kind of moment where informed investors quietly prepare before the crowd wakes up. Whether that's physical silver, mining stocks, or other silver-related assets depends on your own situation. But ignoring what's happening right now could mean missing a once-in-a-generation move. There's also a bigger global shift happening. Countries are slowly moving away from the US dollar. Central banks are buying gold at record levels, and serious money is rotating into real assets. Silver, being far more affordable than gold, is accessible to millions more people. As awareness spreads, retail demand alone could push prices higher, on top of institutional buying and real supply shortages. We already got a small preview of this in early 2021 when social media attention briefly sent silver prices surging. Now imagine that same enthusiasm combined with true physical shortages and massive industrial demand. That's how explosive moves are created, and that's why the timing around this Friday's Asian market open is so intriguing. It suggests insiders are expecting a catalyst, maybe a major industrial demand announcement, maybe a mining shortfall, maybe a geopolitical shock, or maybe the market finally recognizing the silver deficit for what it is. Whatever the trigger is, history shows something important. The biggest market moves always begin when most people aren't paying attention. For years, the spotlight has been on crypto, tech stocks, and artificial intelligence. Meanwhile, silver has been quietly building pressure beneath the surface, and when that pressure finally breaks, the move won't be slow, it will be violent.